start with the China trade deal. It's over, but it's not quite over.
David, that's absolutely right. First of all, we could take a little sigh of relief, and we can pat ourselves on the back for about 24 hours this week because we did get the phase one deal signed. I was there at the White House. I saw it, witnessed. And two, of course, we finally got the passage we needed on the USMCA through the Senate, and we can go forward now on implementation on that deal, which is very important for North America. But also, we've got a lot of work ahead. We've got more work on China. We've got to continue to think about our relationship with Europe. We've got to open up new markets, whether it's in Africa or whether it's in Southeast Asia or other places. So there's a lot on the trade agenda still.
Yeah, I want to turn to Europe in a second, but first, back on China. As I understand, this is a bit different from some other trade deals, where if there's a disagreement, you go to arbitration or something. This one, either party can sort of snap back to tariffs if they decide the other side hasn't behaved themselves. And the United States has said, you know, you're on probation.
Well, I was with Liu He, the vice premier, on Monday in China before I flew back on Tuesday. And I can tell you that his focus is on full implementation. But we know from past deals with China that that's always been an issue. Both sides have a process now by which they can engage, first at the deputy level, then at the more senior principal level. But you're right. If implementation does not go forward in certain areas, then each side has given itself an out, and tariffs could be placed on or other measures taken. That's not where we want to be.
Right.
We still have work to do to reduce tariffs in our economy and, of course, in the bilateral relationship. And we have work to do to address the systemic challenges we have in China around technology issues.
Exactly, two very different issues. But even if this phase one goes perfectly, we've still got a lot of value in goods that's under tariff with China. I mean, we only just...
Over $350 billion.
Exactly.
That's a lot to me.
So phase two, are we really going to get to that? Because now it sounds like, well, maybe not till after the election.
Well, I think that's a big mistake. And my message has been very consistent on this. Pat ourselves on the back for getting through this first difficult phase, reducing tensions, reducing some tariffs, and, of course, improving the market access into China. Areas where perhaps China would have done some stuff, but we needed to put it in writing. We need accountability. We need enforceability. But now we got to move to the areas that are core to China's economic model. They're going to be more complicated. But we can't wait. We got to move to that phase now.
But I was talking with Michael Froman yesterday, former United States Trade Representative, and he said,
good friend,
dealing with things like buying soybeans, you can do bilaterally. When you get to those structural issues that you're talking about, we really need some friends to go with us. We got to do that multilaterally. Do you agree with that?
Well, I agree that we always are better off by working with the Europeans and the Japanese. And the good news on that front, as you know, is the EU Trade Commissioner, Phil Hogan, was in town talking about subsidies and other issues that Europe, Japan, and the United States should lean on in the multilateral context. But we're not going to just do it that way. We're going with this administration to see bilateral engagement. And we do need to get at the industrial subsidies that China has at the provincial and local level. We do need to get at data localization issues. Yes, would it be great to work with the Europeans and the Japanese? Sure. But let's also be realistic and know that there's a bilateral piece to this that is going to have to be addressed as well.
You mentioned Phil Hogan. He's the new EU Trade Commissioner.
Right.
Came to Washington, had some meetings and things like that. Actually, Arvani Quinn got to sit down with him in an exclusive interview, and this is part of what he had to say.
Well, this is the objective of the visit, is to try and reset the relationship, try to understand each other in relation to a number of trade irritants that we have at the moment, and find common ground with the United States in relation to many issues. And we started on a positive note.
A positive note, but you talk about trade irritants. I mean, we've got a digital tax, we've got agriculture, we've got cars, we've got a lot of issues with Europe right now, not to mention Boeing and Airbus.
Well, I would start with we need to have a framework between Europe and the United States that's multilateral, that is regional and transatlantic focused, and of course, that deals with third-party concerns, whether it's China or other countries. But so we need to put forward a program of work with Europe where we are joining forces as much as possible. That said, we do have irritants in the relationship. You mentioned a few of them. The Airbus-Boeing dispute is still out there, which the commissioner talked about in Washington. We hosted. Of course, the digital service tax issue, which France has led on. We got to get a resolution to the OECD. I think actually Phil Hogan spoke to that in a positive way, recognizing this can't be a French one-off or Canadians moving on their own direction. We need an OECD solution. So there are areas where I think we can forge a different kind of alliance with Europe, but there is also the danger that fragmentation in Europe and fragmentation in the relationship could set in.
But focus on the digital tax for a second, because as I understand, the EU sort of let France go its own way. It sort of let it go independently. So we're not negotiating with one, we're negotiating with 27. And we've talked about OECD for some time. Are they ever going to get that done? They talk about it, but they don't get it done.
Well, talk is cheap, right? What we need is action. So the bottom line is the United States has taken an action. We've seen what's happened here. We saw the French finance minister, Bruno Le Maire, come into town. We've got to get a resolution there, and it's not going to be bilaterally. It's got to be in a multilateral context. The OECD is the right place for it, but we've got to get it done. And I would hope that the Europeans in Brussels understand that this relationship is predicated not just on trade flows and investment, but also on digital and technology cooperation. And we're going to have a divide here if we don't work together.
Myron, you mentioned the need for an overall framework in our discussions with Europe. Can we agree on the size of the table in this sense? When we had problems before, the EU came back and said, oh, yeah, we'll negotiate about manufactured goods, but we're not going to talk about agriculture. In the meantime, Congress says, you got to talk about agriculture. Can we do a deal with Europe without agriculture? Because that's a real hot button, as you know.
I think it's very unlikely to piecemeal it that way. Look, we were at the origin of something called TTIP, the Transatlantic Trade and Investment Partnership. It was actually a chamber-created idea, which we got Michael Froman and the previous administration to work on. We failed collectively to get that deal done because the ambition on both sides of the Atlantic wasn't there. We need to deal with manufacturing issues. We need to deal with ag, but we also need to deal with services and digital issues as well. And if we can do that, then we're going to buttress the global trading system and work together on WTO reform and other areas where we have common interests. But if we can't see the big picture, if we can't get there because the ambition on both sides isn't there, then we could have what I call a fractured period in our relationship. We need to move past that and recognize where our real interests lie.
Myron, I think it's fair to say that we have fewer trade uncertainties today than we did 1 year ago today. We've taken care of at least a couple of big ones.
We're in a better place today than we were, no question about it.
Looking forward to 2020, if you were really pressed, what would you think the biggest trade uncertainty going into 2020 is? Is it Europe or is it someplace else?
Well, the biggest uncertainty is the next steps with China and the United States on technology and related issues. We haven't put to rest all those concerns. What we did is took a step forward, restored some trust in the relationship. We got a long way forward on China. So China remains the number one priority in the boardrooms. It remains the number one priority for our government. And frankly, China and the United States, it's critical that the two countries continue to build on this path that they started with phase one, but they're not complete, and we'll see where we go this year.